Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you very much for joining me. Overnight, the Australian dollar slipped further in the early session of Sydney and sunk to a fresh 3-week low against its rival, the US dollar, of 69.09. This also was the call to the downside and the challenge level. That was also met at 69.10. From the rejection, clearly from there, you can see the market has now surged back towards the top side of the range and also where the 60-day moving average is, around 69.80 figure. It is assessed from there that supply should come back into the market, and I do expect to see further weakness coming back into the Australian dollar. And this rebound should only be temporary. So therefore, I'll be looking back towards 68.30 and a re-challenge of this key level, the 69.10, because my longer term view for the year remains to 68 cents. Moving on to the euro. Well, as you can see, the market rebounded in front of 111.6070. The US dollar index, the USDXY, which measures the dollar's value relative against a basket of 6 major currencies, rejects the level of 97.15 and plummets overnight, following by Fed Chairman's testimony in front of Congress. At the moment, it still remains on the lows around 96.58. The Chairman of the US Federal Reserve, Jerome Powell, has increased the market's expectations that the first interest rate cut in 10 years may be coming sooner, by the end of the month when the FOMC meets on 30 to 31st of July. In a prepared statement, Powell said trade tensions and concerns about global growth have been weighing on the economy actively, and the outlook in the US domestically is a little bit to concern him that manufacturing output continues to decline. Powell said there was a risk that weak inflation will even be more persistent than previously thought. The Fed chairman pointed out a number of government policies issues that have yet to be resolved and could drag on the economic sentiment and growth, including trade development, the federal debt ceiling, and Brexit. From a technical point, since we've had the break of 113.30, I do suggest that we do start lowering stop losses in case we do get this continuation from this rebound. From a technical point, the MACD is not supportive, but we don't have a trend anymore because the ADX has dropped down. But the RSI has broken back over the midway point, so let's see how it plays out. The dollar yen rejects the level around 108.90, that is, or 109 the figure. And from the rejection, now puts on track a possible slide towards 107.75. It is ascertained that we could even see a move down towards 107.15.25. For some of us, we didn't get short because we were looking around 109 to 109.70, but unfortunately they didn't come through due to the rejection. Nevertheless, we're going to post it outside range day, near enough confirmation as well that the could see further weakness. We're looking at the pound. We see the market stays a significant move from the lows in front of the level of 123.70.80. After posting the low close there, the market has rebounded, but I believe it will be a dead cat bounce, and therefore could see the market return and fall away from the region of the high 125s and down towards 124.65 to 123.50.70, because it's still trending in a bear case, and this bounce hasn't broken above the midway point, so we could still see that declining. A very impressive rebound in front of the level, which was a key point at 1,378 to 83 in gold. Bouncing off a low of 89, the market's rallied so far to a high this morning of 27. It is still viewed that we could see a challenge towards the top side of 38, which could therefore be a triple top, not a double. Let's see how the market plays out in the next 24 hours and see if this momentum can continue on since the Fed spoke this morning, and he will be speaking later for his second talk in front of Congress. That will be later on today, so keep an eye on that. Support for gold at the moment now comes in at 18.08. Wrapping up with oil, but the market broke above 58 and surged on to 60 and now looking towards $62 a barrel. a good indication from the technicals and a trend that's come back into play after this posted outside range day. So a good challenge and a break that now looks further to the upside. Well, that wraps up for today. Thank you very much for joining me, and as always, look out for the intraday pool. I hope you enjoy the great start to the new day.